All right. What is up, everybody? Happy Sunday. Today is November the 12th. This is going to be very, very quick, only because, I've been staring at the same charts for about 3 hours now, and I am overwhelmingly bullish on the market this week. Um, and I will explain why with each chart. And it's going to be very, very quick. The reason why I say it's going to be very, very quick is because I have about, I don't know, 25 names to go through today. And they all are just showing a bunch of strength. There's like two or three of them that might be good for downside setup. Before I get into the charts, I'm just looking through the earnings for this week. This week we have, just looking through some of the names, we have Fisker, we have Baba, Home Depot, Walmart, Target, Cisco, AMAT. We have JD, we have Macy's, Tyson, XPEV. We have Ross. We have who else? Gap. We have NetEase this week. So some smaller names, some mid cap names, some decent names, right? Some decent names. Pan W has earnings this week as well. So some decent names that might give us potential, some good volatility for the week, right? Let me just look through the economic calendar to see if we have any Fed activity this week. There's some Feds. Let me just start from the beginning of the week, actually. Hold on. Monthly oil market report coming out on Monday morning. On Tuesday, CPI report comes out on Tuesday morning. Right, so big catalyst. Wednesday looks like it might just be. Wednesday we have PPI, so CPI Tuesday, PPI Wednesday. So big results this week. And then there's some Fed activity on Thursday. So overall volatile week. We don't have much in regards to earnings, like nothing that's market moving in my opinion. But in terms of what we have in the economic calendar is pretty big, right? So I'm gonna go ahead and go through very, very quickly. And I'm overwhelmingly bullish, which is not good. Not good to go in with a bias. Everything just to me just looks very strong. Let's just put it like that, right? That being said, so and then again, most of these things are going to be very bullish, especially on this weekly time frame. Looking at the weekly for a lot of these setups, and they're all overwhelmingly bullish. SPX. Let's just go ahead and get started real quick, and then I'll trace back to why I'm so bullish. So SPX 2 weeks ago, candlestick ripped out of that. I believe this is the what is this? Oh, this is an anchor view up. Okay, so SPX ripped out of this what I had drawn up as a potential demand zone, right? An area of consolidation, as you see here on these couple of weeks. And so let me see. Are you seeing my screen? Can you guys see my screen? Oh, am I not screen sharing? Hang on. I thought I was. Okay, can you see it now? Let me know if you guys can see it. I changed it up this week. I got tired of looking at the light blue, so I changed it up a little bit. All right, so I got this anchored view up here. I got this previous area of consolidation on the weekly for SPX right here. You see some couple of dojis before big move down, couple of dojis, a bunch of wicks over here before big move up. So it came back and bounced at this area, put in a very, very strong candle last week, and continued to move through the 50-day, through the 100-day as well. So strong move for SPX. Looking at this chart blindly, right? We did get a nice deep retrace, almost 100% retrace. Actually, it might have been a full retrace. Looking at it, let me look at the low. The low here is 4103.98, and the low here was 4103.78. So we got a full 100% retrace, meaning it completed this move here from this bottom of this candlestick to the top here, and came all the way back down and undid the entire move, and then ripped it right back up to go back to 61.8% of the move, right? So strong. So what took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks to do in the past took 3 weeks or less than 3 weeks to do, just a couple of weeks ago. Very, very bullish. So this is just very strong. Above the 618 level, we could target that 786 level at 44.99. We could just call that 4,500 just to even things out. However, let's look at ES real quick. ES is showing, ES has this week's candlestick printed so far. Let me get rid of some of these levels, remove drawings. ES has this week's candlestick printing so far, which is a red candlestick, rejecting at that 100-day moving average, right? SPX's 100 days is a little bit in a different spot. ES, whenever you trade at SPY or SPX, you got to follow ES just to know what the real vibe is, right? So we got this 100-day moving average where the weekly rejected last week, and we got this new week forming here. Now, again, everything looks very, very bullish, but it really depends on how strong this 100-day is. I don't expect much to happen overnight. I expect tomorrow morning either we break through this 100-day or we come down to test of 50. That 100-day is going to be crucial for a lot of bullish activity this week in the market. Now, if for whatever reason we can't break through this 100-day or break through this high of last week, then a lot of my setups that I'm going to discuss tonight are invalid, right? It's important for me to say that because, again, everything just looks so strong to me. I think that it's important that we prepare for both directions. So I'm going to look for the negative. I'm going to look for downside in some of these plays. But right now everything is extremely bullish. So let's get started. We got S&P, which is it's currently above its 100 days, sitting at the 61% fib, bounced off that supply zone. 2 candlesticks to complete a 10 candlestick move, right? 2 weeks to complete a 10-week move. Very, very strong. Next one, we got QQQ. QQQ has obviously been leading the charge with tech being one of the heavily weighted sectors in the S&P. I believe tech is like 30% of the S&P or something like that. And there's four sectors that compile about 60% of the S&P. So, tech, whenever tech moves, usually the market tends to agree. QQQ on a weekly. Now, we did break down through this downtrend. I'm going to go ahead and draw this downtrend here, right there. We did break through the downtrend and broke it out, made a new high, broke above this high here. Now we're targeting some of these previous weekly highs. Above 380, so 380.83 is the first target. Above that, 384.71, we could call that 385. Above that, we got 388. 388 will give us a new year high, right? And then we got some of these previous highs that I won't discuss at the moment, but above 388, we got a new year high. Also, if you look at the weekly, broader time frame, even if you look at the monthly, this is forming a very, very large cup and handle. Here's your handle. There's a potential for this to really, really shake out if what the Fed says and what, tech earnings already kind of came out. Strong week out of that. Strong couple of weeks out of tech earnings. Now, if whatever the Fed says supports, low rates or whatever the case is, if it just makes sense for investors to put money in the market, I feel like this is going to rip through very, very quickly. So just keep that in mind. Now, if we do get a red week, and again, this is me putting on my bear goggles. If we do get a red week, just target the low of the week, right? Target the low of the week. Right now, QQQ, NQ's up here somewhere, just like ES is up here, NQ's up here somewhere right next to it, next to the highs of previous week. Target the 100-day, right? Bring it back to the 100-day, which is sitting at 367.70-ish, right? That'll be your target. From there, you target the 50, which is sitting here at 364.53. And again, that's if that 100-day fails on ES. Next one is, what's this? XLE. XLE. Let me go ahead and, XLE. So we got XLE. XLE typically, as you know, is the hedge for the market. When the market is strong, XLE is weak, and vice versa. This has been a little disjointed in the past couple of weeks. In the past 2 or 3, 4, maybe 4 Fridays, I've noticed that tech and energy have been running in the same direction for a majority of the day, which is very strange. It looks like it's finally decoupled. We put in that green week last week, but it wasn't as strong, obviously, as tech. And then we finally disconnected, XLE disconnected from tech and now put in a red week where tech put in a green week, right? So I expect to see more of that. Now, if we are going to take tech to the upside, we can just as easily take XLE to the downside, break down below low of week at 82.45. We could target this 81.97. Underneath 81.97, we could target about 80.56 or so right there, right? So first target would be just this previous high here of this candlestick below low of week, right? Previous target here, and the next one 80.56 for XLE. Now, if tech does fail and the market does fail, then we can take this and we can try to play this back up to the 200-day moving average, right? So you can take entry pretty much anywhere within this wick. I think would be a good entry. Set your stop to the bottom of this wick. Ideal entry would probably be right here at 83.40 or so, right? But anywhere within this wick, I think it would be a safe entry as long as it bounces off of this low right here and can target that 200-day moving average sitting there at $85 for XLE. And that's if, again, the market fails. Let's see. Next one is XLF. So financials made a very strong rebound. You know, they were getting hammered with some high interest rate news, which I had previously thought was really good for banks. However, I think it's just as, just giving them more consideration and more thought, I think it's just as difficult for them because they tighten up their criteria on who they're going to lend to, meaning they're going to lend to less people. They get less volume. And they're not getting paid off of the rates. They're getting paid off. I mean, they are getting paid off the rates, but it's also a volume game for them, right? That's why when the rates are low and everybody's borrowing and money's moving around, it's a big volume. Even though they're getting smaller interest yield for the banks themselves, they're getting more people to make up for the lesser amount of interest, right? Nowadays, it's just like, all right, if it was 20 people before, now it's 2 people, right? And it's not like 20 people at 3%, 2 people at 30%. It's like 20 people at 3% and 2 people at 6%. So it's not like such a major, you're not making up for the fact that you're not getting that volume. Looking at the price action, what's this? XLF looks like it's been wedging for a while. It broke down below the wedge here, right? You see these lows getting higher. It broke down and made it kind of a equal low to the previous low here, and then gapped up on, looks like what might have been earnings. And now we formed an inside bar last week, right? Nice inside bar last week, sitting above the 100-day moving average. Inside bar, resting bar, right? Not too much. I would say there's not a lot of volume in this. Even if there is a lot of volume in it, it's like still really good because it didn't break through the high and it didn't come anywhere near the middle of this candlestick. It's just chilling right at the top, especially on a 200-day moving average. There's a potential for this to be a potential 3-bar play, right? We got that breakout candle that formed higher than all of these highs here. I think it even took this high out. Let's see, 33.94, 33.94. So equal high to this candlestick. And then we have inside bar, resting bar pretty much tested this whole candle, tested the wick of this candlestick, and it held and it bounced. So we can get a potential rip to the upside. 3-bar play could easily put us at 35. It might be like a 2-week, maybe more like a 4-bar play, right? I'm not going to say another rippy candle to the upside here. Maybe one candle goes to the top of this trend line, and then the next candle maybe goes up to 35, right? But there's a nice potential for this to return to 35 based on the strength that it has shown in the past 2 weeks for XLF. Next one is Amazon. And let me go ahead and put this. I'm going to go ahead and throw the watermark on it. Yeah, there we go. So it just might be a little easier for everyone to see. This over here is very tough to see, right? So Amazon. And let me just, for perspective, look at my watch list. Everything has a green flag on it. Everything has a green flag on it. So there's a lot to discuss, and everything's very, very bullish again. And that might just be a fault of mine here, but just look at these weeklies. Everything's very strong. You got nice strong move to the upside. Let me just pull back. Okay, so we had a little bit of an inverse head and shoulders formed here. Nice strong move to the upside. Finally found the resting period, pulled back, found some support right over here in some of these previous doji candlesticks. Found a little bit of support there, ripped to the upside, and continuing the move, right? This candlestick took out all this previous resistance. This candlestick took out the high of this previous week plus this week. Now we're in the range of this week. So that's what I'm targeting. I'm targeting 145.86. Above that, we got 146.57. 146.57 is from a long time ago, right? 146.57 comes from August of last year. So nice cup and handle forming on Amazon Weekly. Strong move out of this kind of flag pattern or falling wedge or cup and handle, however it resonates with you. Very, very bullish. Strong candlestick last week, strong continuation this week. I want to see a potential continuation into next week, right? I want to see a break above that 146.57 mark. Now, if we do, this is pretty extended from his 50-day. Let's go to the daily. Pretty extended from his 50-day, pretty extended from the 100, pretty extended from the 20, right? Very, very extended from all of its moving averages. Not a terrible thing, but there's something to keep in mind, right? Now, if we do fail for whatever reason and we can't hold some of these volume levels, these green lines here, I'm going to go ahead and just give you a quick range. If we can't hold between That area there between 143.32 and 141.60 will be the crucial range, I think, in order for us to hold where all the volume is. You see these green lines here. If we can't hold that area, then I would target the bottom of this candlestick. Bottom of Friday's candlestick will be the first target. The next target will be the bottom of Monday's candlestick, which is 138.36. I don't expect it to get all the way down to the 50. I expect it to maybe retrace a little bit. If we do get that pullback, it would be nice for it to come back to this 138, 137-ish level for Amazon. But again, look at the weekly. The weekly is very, very strong. It's showing immense strength. I don't see any reason why, unless, again, ES gives us that strong rejection, whatever other catalyst in the world develops and gives us reason to fail, right? But seasonally, and seasonality usually isn't on the side of tech for November. Sometimes, right? Sometimes it is, sometimes it isn't, right? Usually it isn't, but I've seen green monster Novembers for tech, and tech leads the market. So just keep that in mind. All right, next one we have is CCJ. CCJ has been on an absolute tear. I believe this is all-time high for CCJ. Oh, no, it's not. It's not. It's annual high for CCJ. So let's look at the 12-month. Or sorry, that should have really been a 1 month, but while we're here, indecision year, strong breakdown year, rebuild year, breakdown year, and then nice clean curve to work our way down. Strong move up a couple years ago. Last year, indecision year, continuation move this year. Let's go to the 1 month like we meant to. Month over month has just been forming all 2 up candlesticks. 1, 2, 3. Well, inside bar, 2 up, 2 up, 2 up, 2 up, 2 up. What that means is breaking the range of the previous candlestick to the north, right? This one broke down, but still formed the green candlestick and closed higher than it opened, still formed the green candlestick. And then we had this one, which ripped to the upside for the weekly. To me, it's just showing a lot of strength. Nice inside bar on the weekly. I set some of my previous highs or some of my previous targets from last couple of weeks. If you look at the daily, you'll see them a little bit more clearly, right? Some of my previous targets for the last couple of weeks. 41.22, 39.78, 38.77, and then 37.55, which is a 50% fib here. Those are going to be your levels to the downside in case this ends up being a double top, right? This could easily be a double top. But again, on the weekly, we have that inside week, strong inside week. It came and pulled back to about more than half of this candlestick, but buyers brought it right back up and actually closed green, right? So there's a potential for this to break out above this week's high or last week's high and go to previous week's high. And that's what I'll be targeting. Above previous week's high, we got 44 for CCJ. Next one is Lulu. I will take a look at Tesla. I'm not liking Tesla for this week. I'll just put that out there right now, but I'll definitely take a look at it. Lulu. For those of you that don't know, Lulu is part of the S&P 500 now. I forget what the name of the company was that it replaced. It was a pretty big company too. But anyway, it's been part of the S&P for about 4 weeks now, a month and a half, 6 weeks, something like that. So I did have this potential head and shoulders lurking here. We had one shoulder here, head, and then another. It just was a very tough area for this to break above. It ripped through on previous earnings and it fell hard back to that support and then bounced. And then on the S&P edition, I think it just gapped up, tried to fill the gap, barely did it. And now we are here. Lulu, I think on the weekly is just beautiful, right? We had the strong week last week, bounced off the 50-day moving average and broke above the previous week's high last week. And now we're targeting the week before that, or a couple weeks before that, at 419. Let me just go ahead and put that at the high of the week. I don't know why that's a bit off a little bit. 419.86. So let's call it 420. Above 420, we have, what do we have? Like this area over here. Above 420, we have 432.74. That'll be your target for the upside for this next week if we do get the nice breakout. Underneath that, we can target break of low of week, 404.74. Actually, we could do it. We could get a little bit more micro on this. Yeah, I would still keep it at 404.74 just because it looks like a support resistance flip level here. So it looks like it's very strong. Underneath 404.78-ish right here, or by the time this 20-day catches up with it, underneath the 20-day, right? Whichever one shows the most weakness. right? I think by tomorrow or the next day, this should be up here. This blue line should be up here. From there, you break it down, take it to 400. Underneath 400, we could take it to the 50-day moving average for Lulu. Again, that's in the scenario where the entire market tanks. Otherwise, this looks very, very strong for me to the upside. Next one is Walmart. Look at the daily on Walmart. Walmart is very, very, very beautiful on his daily chart. This is all-time high for Walmart. Just about all-time high. We have the all-time high that was achieved on November the 7th. So Walmart just has to, it had its all-time high. What happens at all-time high? People usually sell off a little bit. It came and broke down, made 3 new lows, daily lows, and then ripped up on Friday. Friday was just a monster day in the market. So everything pretty much ripped on Friday. This is the, you can take breakup day high, or you could just wait the extra 40 cents till it gets to the all-time high, 166. Now, typically, historically, this is a very weak area for Walmart. Walmart, every time it gets into like the high 160s, anything above 165, it usually sells off. As you can see here, also, I'm just going to pull way back. Yeah, 160, 77. Walmart's just, I remember like trading Walmart when it was like 140 and waiting forever for it to make this move right here. This move right here. Actually, this is around the time that I started trading Walmart. Right around this time. Made this move and then it ripped all the way down. And finally, it's slowly worked its way back to, making it back up here. I think that Walmart has a great potential, especially with their Walmart fulfillment services, which is similar to what Amazon does with their marketplace. I think that there's a great potential for Walmart Plus if they expand their partnerships. Right now they have a good partnership with Amex. I think they have something with what is it, like Uber, one of those car companies. I don't know, but I think that they're positioned to be great if they can do the fulfillment service thing right. Above that, 166.61. We got 168 above that. We got 170 above that. We got 175. And that 175 is a stretch, very, very strong stretch. Yes, QQQ has a very beautiful cup of handle on the monthly. That's very, very nice cup of handle you have there on the monthly. So breakdown on Walmart daily. The entry, I think the safe entry for this would probably be, I wouldn't call it the safest, but I'm trying to get this. It would be that 165.46 level, this fib level right here. This fib level would be a decent entry. The best entry obviously would be the safest. It would be break of day, low of day. But you could easily take this fib entry down to the low of day, and that's a nice 40% play or something like that, right? 30% play, whatever the case is, depending on your entry. So break down below low of day, we got the 20-day, and underneath that we got the 50-day. It's very important to keep these moving averages on your chart because that's where momentum is born and where momentum dies, at these moving averages. Even if it's for a minute or two, it might be enough to kill your premium. So just keep them on your, if you're in a play, throw them on. If you're not in a play, take them off if you don't like them, whatever, right? I keep them on my charts. I love them. So 165.46 short entry down to a low of day. Underneath that, 20-day. Underneath that, 50-day. Underneath that, we got 161. Above 166.61, we got 168. Above that, 170. Above that, 172.50. Above that, 175. Next one is X. Now, I have X on a weekly here. I'm not in love with this weekly candlestick. This candlestick is, and forgive all these lines. This is, you want to see lines on your screen? There you go. I'm not in love with this. It looks like kind of a hammer, but it's also doji. It's just really ugly looking candlestick on a weekly. So let's switch it to daily. Daily makes a lot more sense. Now, I do like the strong move to the upside. You know what? I can't. I do like the strong move to the upside. And I like the kind of consolidation. I like whatever happened here. Bunch of buying pressure. Actually, let's go into it real quick. Yeah, you know what? Someone just got clapped. Somebody hit market, and somebody sold it at just a crazy high price, and somebody got clapped. That's all that is. So you can almost ignore it. But we won't ignore it. Right? We won't ignore it. Let's call it, we had this kind of new high. We had this doji that formed, whatever the case is. Price rejected way up here. Went flat the next day, and now we're working our way back up. This is, to me, very, very strong because we had 3 days of selling pressure, and this is as far down as we could go, right? Right down here to 33.92, and that was on the first day of selling pressure. That was the furthest down we could go. Now we're back at 34.35. So Um, I like X to the upside. Obviously, I want it to take out that high right there. I'm gonna ignore this as a target. I mean, you know what? Let's set it because that could easily be a supply zone that somebody created there. And somebody said, you know what, market, let's test it. But above that, let's see, 35.80. Yeah, that could be a potential supply zone. Looking at this part of it to the left, right? Above that we got 37.79, and above that we got 39.25. On our way to the mystical 40, which we've achieved in the past with X, but not so far this year, right? But I like it for now. It looks very strong. The daily makes more sense than the weekly, but the weekly is still very strong. Let's go to the next one, D-Dog. Weekly is very, very strong, but let's not be fooled. It's a gap up. Now, we did have a nice. So I drew this trend-based fib to find where the future targets would be, and we found some potential support here at 78.09, and then we had earnings which gapped us up. We had that double inside bar on the daily chart, and then we had the rip through, which Jake had mentioned in the group on Friday, and I hope some of you guys made money off of it. So I think it's still in play. What I'm looking for here is earnings drift. I'm actually going to get rid of this one. I'm looking for earnings drift, which is a phenomenon where the price moves in a direction based off of earnings results and continues to move in that direction over time, even if it's very slowly. Now, what that means is it might go ahead and do something like, it might do this, pull back, come up a little bit, pull back, it might do something like that. But whatever the case is, I'm looking for it to continue to the upside. That's it, plain and simple. Palo Alto reports tomorrow. Palo Alto's report is going to be a catalyst for Datadog. So I would wait for, is it tomorrow? Let me just take another look. I would wait for them to, let me see, is it tomorrow? I don't even know what their logo looks like. Oh, no, it's not tomorrow. It's on Wednesday after close. So we have a few days before they report earnings. So maybe there's a potential run up in Palo Alto, which will cause a equal move in Datadog for this week. Now, if we do get the failure based on, again, that ES 100-day moving average rejection, then from there, take it and just target the low of day. Underneath low of day, target the low of the week, low of Tuesday, which is 96.24, which will land us right at that 100-day moving average. Underneath that, we can reassess, but I think from there, if we do rip down, we can go down to 90.86 or so, back to the 50-day moving average. So first target low of day, second target low of this little formation here, third target the 50 for D-Dog. But again, bullish, in my opinion. Next one's Netflix. Now I drew out this long trade setup. This looks like it was just like a few Sundays ago, 2 Sundays ago, whatever. And we got the entry on it. And again, this is not, I don't usually trade like this. I just like to show what's possible with this. And I like to show where my stops would live, right? And where my targets would live. So we did get the entry a couple, that the Tuesday or whatever after, it was Halloween Tuesday. And it's just been really, really strong the entire time. And reacted is on my levels here. Go ahead and stretch that out so we can see a little bit more clearly. Reacted to some of my levels here, and then just Friday, beast move on Friday. Shout out anybody that took it. I think Jake has been just screaming about Netflix for like months and months and months. And again, if he talks about Netflix, especially on like a Thursday or Friday, like just close your eyes and throw your money in, right? 450 is the final target for this move. As you can see here, this is a good 3.6 to 1 risk reward. And then obviously as you enter and it goes up, you move your stop up little by little, and the risk reward gets much, much better, right? As you can see, it's like 40 to 1 right now. I'll go ahead and just leave it there. Wherever it was there. Okay. Oh, I had it set up the 50-day moving average. Good. Okay. So 350 is a final, or 450 is a final target. Above that, we got 460 if it continues. I think that they're gonna. Netflix is strong. I mean, they kicked everybody off of their sharing plan. I think they even mentioned like raising prices to like a premium service or something like that. So I just think that they're poised to continue to go strong. No, I haven't gone over coin yet. I'm gonna go over coin today. Uh, coin is coming up soon. Next one's Apple. Let's look at the weekly. Just absolute beast. Excuse me. Apple's one of the ones that I'm not in love with the risk reward because it's to the downside. To the downside. I'm not in love with the risk reward to the downside right now on this weekly. I think that 186, 187.65, and 189 are very very close for Apple. I think that those two weekly targets are very easy to achieve, especially with this. We had the support on the 100-day moving average on these 2 weeks, and then we kind of didn't touch it again until this day here on the 12th of October. This week has been the second time we're back in contact with the 100-day moving average, and we consolidated right above it when went sideways on it a couple of days and then ripped the upside on Friday. Now again, actually looking at the daily doesn't look that bad. The risk reward to the downside. You can set your stop as a high of day and then just play this candlestick back to the bottom. There's even a very small gap in volume between these bodies here. So you can play even into the open of Thursday's candlestick if you wanted to, right? So set your stop at the high of day, which is here if you're downside, right? Set the stop at high of day at 186.57, and then you could target this 182, 183 level. So nice $4 move to the downside if you want that downside, right? But again, everything is very bullish. This is just very very strong moves to the upside. Nice consolidation, even if it's for 1 day. Nice consolidation for a continuation move. I think that 190 comes before the 100-day moving average for Apple. AMD finally broke out of this channel. That channel that I've drawn for weeks and weeks and weeks. Finally ripped through the 50-day with strength. You see it's been struggling with it a bunch, right? Finally ripped through it. Finally broke through the channel last week and continued to move this week. So I think it targets at 122.12 this week. Very, very easy. And then in the next couple of weeks, if the strength continues, maybe we get that 132.83-ish. And then from there, obviously, just look at it. It's like a very cute cup and handle forming on the weekly. Nice consolidation for about, 12, 16 weeks, however many weeks this is here. Let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21 weeks before it broke out. So 21-week consolidation on the handle. Nice strong move. Can possibly get to 140 if we get a lot of participation in the market. But I can see 122 and even like 125 this week for AMD. So we'll see. If you like downside on AMD, I would just play it candle by candle, day by day. Each day the lows got higher, so I would just play each day's target low as your stops into that 100-day moving average. I wouldn't expect much underneath that 100-day moving average unless there's really terrible news, right? And this is me forcing myself to give you some downside setups because I am overwhelmingly bullish. Again, looking at CAT, I like CAT. Now, CAT has better, it looks better to the downside, just because there's some time frame continuity in the weekly candlestick. Right, we have just like week after week after week has been breaking the range to the downside. We broke under the 200-day moving average. We got some death crosses occurring in the 20 and the 50-day moving average. The 50 is about to death cross to the 100-day moving average. Like there's a lot of just bearish behavior here. However, let's keep things in perspective. We do have here's a high, here's a low, here's a higher high, here's a higher low, and here's a higher high, and then here's right now so far a higher low, right? The 200-day moving average here. Whenever things fall underneath the 200, they like to retest it very very quickly and flip it if they can, right? They like to retest it and flip it. Now, Caterpillar is, as you know, they do earth movers and home builders and all these things that involve opening up land to develop land, and there hasn't been a lot of that based on the high interest rates and all that. Everything going on in the housing market, which catalyzes what happens with the builders market, etc. So there's a lot of that. However, so keep that in mind. Very bearish still. However, this inside bar at the upper range of the previous candlesticks range, and well within the previous, even before that candlestick. A lot of buyers brought it right back up. Now, this is like just would be very rare if this happens, but if it does, I'm just targeting 242.92, which is a high previous week, last week's high, 244.24 above that, and then 247.63, which will be a nice. And then I'm not. Let's be real. I'm not gonna say there's a pivot machine gun here that's gonna happen, but I mean the highs have gotten lower on each candlestick. So on a technical sense, yes, there is a weekly pivot machine gun loading here. If buyers step in, I just don't know what the catalyst would be. Like, what would the catalyst be to do that, right? They had earnings last week. They had a positive earnings, which is why it kind of, buyers kind of stepped up and brought it back up. Now, we do have a little bit of demand down here too. Down here and over here is a little bit of demand. But if we do get upside, this will be nice. Nice strong candlestick. Cat likes to put in strong candles to the upside, so just keep that in mind if you like it. Otherwise, if you want the downside, you can go ahead and take. I'm gonna get rid of this one. I'm gonna bring it down here. Take the low of this past week, 233.57, and then those are your targets right there. You got 231.28, 226.68, 220.75, and 214. And then if you want to just keep it macro, break down below this week's low, try to target the previous week's low. Keep it simple. I feel like it'll go and test a 200-day before it goes down, personally, but I don't know. DKS. Again, this is another one that doesn't quite look bullish at first glance. However, if you keep things into perspective, right? I'm just going to go ahead and draw it out for you. It's tougher to see on this one. We got the low, we got the high, we got the higher low. Is that a bit of a higher high? Yeah, it's a little bit of a higher high. All right, and then we got this low here. Now, I'm not gonna ignore this double top. I would be foolish if I were to ignore this double top, right? This top, this whole area where it rejected. And actually, I can even extend this over and bring it into, call it a supply, right? It could easily be a supply sitting in this area. But the reason why I like it to the upside, along with everything else in the market, is because we have an inside week. We have an inside week above the 50-day moving average, right? Let me get rid of some of these levels, some of these drawings. Inside week above the 50-day moving average, which is that red line. And yeah, we got a bunch of death crosses here on a weekly. There's a lot. But we do have the inside week above the 50-day moving average, resting bar, this igniting bar, breaking above all this previous resistance, potential for a 3-bar play. I'm not looking for a 3-bar. I'm looking for a retest of that 100-day moving average. I know that Dick's seasonality is really strong around this time of year because they make a lot of sales. They start to get a lot of sales volume around this time of year. I've been very bullish on this ever since it gapped down. I've given up on this gap for now. I just wanted to we also have kind of a potential pivot machine gun loading right here. I just think it's a nice setup, right? I just think it's a very, very nice setup to the upside, right? Break that downtrend, rip back to the high of the previous week here at 117.78. Above that, we got the 100. I just like the setup. I think it's clean. I like the stock. Next one is Google. Google, on a weekly, we had the strong rip downside, inside candlestick, broke previous week candlestick to the upside, rejected right at the 20-day moving average. Let's go to daily, right? Strong gap down on a positive earnings. I think they just missed on their, I think their what's it called? Drawing a blank. The projection guidance. Their guidance is weak. Which is why investors sold it. But whatever, people bought it down here and brought it right back up above the 100-day moving average, targeting the 50-day. If we can get above that 50-day, I wouldn't even take entry underneath the 50-day, to be honest with you. I'd wait till it crosses that 133.52, maybe 133.50 by the time tomorrow rolls around. And then from there, start working your way into some of these upside targets, right? The 138.81 will be a big one, and then 140 obviously is going to be the next one. But again, that's if it breaks through that 50-day moving average. Google is very nice to the downside as well. If we do get that breakdown, break below the 100-day moving average, right there, we could target 127.50. Underneath that, we could target this big chunk of volume here at 125, and then underneath that, we could target 122 and change, right? I'm not going to call this 200-day moving average just yet. We have some nice targets to the downside if we get some big rippy candlestick to the downside. This can go either way. This is very, very nice risk reward in both directions, in my opinion. What is this? Good retracement. Yeah, so good risk reward in both directions. Google's still very, very strong. Look where it kind of started off in the year, way down here at 85, and now it's at 133 and change. So keep that in mind. Next one is NVIDIA. NVIDIA failed a head and shoulders on a weekly. We had a head and shoulders loading here on the weekly between this body, these couple of bodies of candlesticks, this here and this here. Came down, didn't break the neckline down at 409.43, ripped up as the rest of the market did, and now broke out above all this previous support, all this previous resistance here. So now we just got to retest this previous resistance here, 500, right? 500 is the level to beat. So above 485, I would say, and NVIDIA is one of those that likes to work in round numbers. 484.72 was a high week. Above 485, I will call it 500. And then above 500, we can start climbing this ladder of Fibonacci levels here. Underneath anything below this 481.88 level, this level here, where it rejected a bunch of times, if it rejects one more time, it wouldn't be a surprise. I would just play it to the bottom of the week. Play from the top of the week to the bottom of the week. Target for the bottom of the week is 448.99, so 449. Or you can just call it 450. Right? So above 485, 500. Underneath 480, let's play 450. What else? What else do we have? TSM. I like TSM to the upside. TSM has really clean price action. Strong move down, pull back, 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 higher low, higher high, higher low, higher high, higher low, maybe higher high. Sitting above the 50, above the 200, above the 100, all moving averages consolidated, just some clean price action. Strong move up. A three candlestick out of a two candlestick. So range expanding candlestick. Made a new low and then made a new high above previous week on the 200-day moving average, and then continued to move to the upside this past week above the 200-day moving average into previous support. So break above previous support at 97.61. We can target that 101.76, and then above that we got 105, 107, 110 for TSM. Now, if you like it to the downside, just play to the 100-day moving average. Underneath that, play 200. Underneath that, play to 50. Play your moving averages. You don't gotta overcomplicate this. Next one is Boeing. What did I like about Boeing? Was Boeing one of those that has a better daily chart? Yeah, okay. So the weekly looks okay, right? We ripped up and then fell right back into our channel and then found support, right? It's funny how that happened. So it did all that. I like Boeing because it ripped all the way down, and now we're in a political environment that supports Boeing. Put it like that. Now we had a potential inverse head and shoulders here, with a shoulder here, head here, higher shoulder up here, above the 50-day. We also kind of have a cup and handle right here. Here's your handle trying to break out. Also kind of a bull flag right here, right? Upside H, however you see it. We're above the 50-day moving average. We can, let me get rid of some of these. Remember that, keep that channel in mind, because that channel, Boeing loves to channel. Boeing loves channeling. So this one will probably finally get invalidated, but put it there. But it'll form a new channel at some point in the future, as it always does. So above 196.65, or above high of day rather, 197.14. We got 199.62. Let's call it 200. Above that we got 204.50. Above that we got 208.35. Underneath the 50-day moving average, just play the lows of each day's previous low. Right underneath the 50, target this. target this, and then let's go ahead and target that one, right? Why not? For Boeing. Next one is Coinbase. Coinbase is another one of those that I like on the daily better than I like on the week. Let's look at the daily now, and I'm gonna go ahead and clean the slate. All right. So what I like about Coin has been trending slowly upwards, right? It's gonna be just a hack job of a trend line, but you guys get the gist. It's just been trending slowly upwards, and it's above all of its moving averages. It made a nice strong move to the upside on Thursday. Inside bar on Friday. Let me zoom into it. We also have Bitcoin, which has been on a tear, and coin based tickers. No pun intended. No, I haven't gone over Tesla yet. I got Tesla. Tesla's not on my list, but I'm gonna go over it. Yeah. So coin with all the energy directed at crypto, crypto names, Bitcoin. Coinbase naturally is going to get some energy as well. Coinbase has been spending a lot of ad money. I think that there is potential for Coinbase to, they're not going to spend that kind of money unless they're making money. The share price isn't always reflective of how the company is doing. The share price is reflective of how investors think the company is doing. I'll say that again. The share price is not reflective of how the company is doing. The share price is reflective of how investors think the company is doing. So I think there's a lot of big players. Let me put my tinfoil hat on real quick. I think there's a lot of big players involved in Coinbase. I think that there's a lot of benefit to keep the price of Coinbase low for now. I think that there is there's a bunch of things going on economically that aren't very spoken about widely in the U.S. dollar and the petrodollar and the banking standards and all that stuff. And there's a big shift that's occurring this month. Actually, I think it's happening actually this week. Something, I think the name is like ISO 20022 or something like that. If you spend like 5 minutes on Twitter, you'll find some conspiracy theorist talking about it. But the point of everything is they're changing from the Swift banking style system to something that has more accountability, which is based on blockchain. XRP and things like that. Just like they're changing, things are changing, and all of that is to say that Coinbase might benefit. Maybe not this week when the catalyst occurs, maybe not this month, maybe not this year, but at some point, right? On the technical setup, we had a low here, way down here, off my chart. We had this high for July. We had a higher low with a bunch of support sitting here at this level around $70. And now we're working our way. We broke this pivot, and now we're making new pivots, right? Potentially. So it's good to the upside. It's not great to the upside. I do want to see a continuation. I like the risk reward on this. The reason why I have it on my chart for green for this week is because I do like the risk reward on this to the upside. Let me go ahead and paint that out for you real quick. Tinfoil hat off. And let me go light that on fire real quick. Let me see. Where the hell's my? Is it here? Where's my fib? My long entry. Am I bugging? All right. Well, we're gonna have to use our imagination, guys. Because I don't know where the tool is. I don't know where it went. So let's just do this. No, you know what? No. Hang tight. What's going on? Where is it? Here. Wow. I have no clue where it is. All right. So let's do it this way. We'll go ahead and that can be right. You can take your entry. So look at where price closed. Price closed at. I'm gonna go ahead and pin this where the price closed right there at 92.92. Right, 92.92. You can take your entry at 92.92 to the upside, targeting the previous day's high. All right, targeting the previous day's high. There. All right. How's that? All right. So take your entry, target the previous day's high, and you say your stop at the previous day's low. That's it. Simple. Now, let's go ahead and paint this risk reward. It's gonna be. I'm doing this disservice, but it is what it is. Hold on. Did I select? Yeah, I did. Okay. So this box, I can paint this box inside of this red box inside of this green box a couple of times. There's 1, 2-ish, 3-ish, at least 4, right? It's more like 4 something, but so that's 4 times. The green is 4 times bigger than the red. That's a 4-to-1 risk reward ratio. Just good risk reward ratio to the upside. Good spot to kill your risk on the downside if it does go against you. It can easily go against you, right? It opened up here and it came down and closed at the previous open. Came down and closed lower, right? And you have this big volume shelf with this green line that you got to break through at 95.79 or at the high of day, right where it rejected actually, right? So there's a lot that says that this isn't going to go through, but if it does, the risk reward level is just phenomenal to the upside, right? Now, really good risk reward to the upside. Now, if you wanted to take this trade to the downside because we have a market that supports a nice downside move, you can do the same thing here. You take your entry at the low of previous day and you set your stop right at the open of previous day. And it's the same exact risk reward ratio. Actually, I'm not going to call it the same. If you're targeting this day's low, it's the same. If you're targeting where all this volume is, look at all this volume over here. All these green lines, all that is where the concentration of volume is. You're still getting like a 3-to-1 risk reward ratio. So it just works out really, really well. I think it's just a very nice setup for Coinbase. I just want to know where these tools went. Is it here? That's not nice. Anyway, so I just think that it's set up very nicely in both directions. I'll go ahead and leave this because I think that I'm a little biased to the upside personally. So I'll go ahead and leave that. How did I determine the 4-to-1? I basically took, and this is how it's very easy for me to eyeball these things. And this is how so you see where the red line turns green. Let me just zoom into a little bit more. Oh, I just zoomed into everything, huh? All right, you see where threshold goes from red to green? You want to, right here is where your entry is, right where that red meets that green. So that's your entry, and your final target for the move is the top of this, which is the top of the green box, and your stop. So let's say you enter calls, you enter here at this level at 92.96, and that's your entry for calls. You're trading the 100 calls, 98 calls, 95 calls, whatever, 105 calls, whatever, it doesn't matter. You're willing to risk this much in the red, which is realistically low of days right there. You're willing to risk this much, which means if it comes down and breaks below this level, then you cut it, right? To make this much in the green, right? You're willing to hold the play. Might be a 2-week play, might be a 3-week play, might be 1 day, but your entry's here and you're looking to make it up here and you're willing to break down this much to make it up there, right? So what that means is, and I'm not answering your question just yet. What that means is take it up here. It might do this. It might come back down and like kind of, make you feel a little nervous. And then it might eventually go back, more realistically, it'll probably do something like that. Right. but it didn't stop you out. It didn't stop you out because it didn't break below the bottom of the red box. Now, the reason how I got the 4-to-1 is I took this red box and I measured it across that green box. Right, so I took this red box and I said like this. Right, there's one. Let me go ahead and draw a line on it. A little bit more precise. So if the green ended right there, like if the top of this green was just right there, that's a 1-to-1 risk reward ratio. I'm willing to risk as much as I'm willing to gain. Right? Hold on. Send to back. Send to back. I'm willing to risk as much. So if this green was down here and that was my final target, that's a 1-to-1 risk reward ratio. Which you shouldn't really be trading those 1-to-1s. They're just not that good. They're not good. You want to trade, you want more, you want to risk less to make more. So that's one, right? So from entry up, that's one, right? I'm gonna go ahead and just stack it on top of itself. And this is like just a little bit of really basic, like I guess geometry or whatever. I don't know. But that's two. I'm willing to. So that's a 2-to-1 just from here to there. So if you take the entry at the low of day or at the close and you take it to the high of day, that's already a 2-to-1 risk reward ratio, right? Let me just move it up. Now I move it here and that's 3. 3 times that my risk level fits within my reward level. That's 3. And then again, it was like 4 and change, right? You got 4 and you got like, I don't know, 4.2 or something like that, right? You got your 4 right here, and then you got this extra little space that's still unfilled. But basically, I'm willing to risk this much of a red shaded area of a move in order to make 4 times as much as I'm willing to risk. Is that clear? Does that make sense? I'm gonna go back to Netflix real quick just to illustrate that one more time, because I have my long position on Netflix. So with Netflix, it was similar. It was, I was playing it off of this candlestick here. Let's go to the 65 minute. I was playing it off of that candlestick there, or that day, this day here, and I said, all right, cool. I'm willing to let's do a 90 minute. I want to take my entry above the high of this day, but I want to set my stop. It was at the 50 at that point, so I want to set my stop at the 50. Price went, it gave you the entry. It even pulled back a little bit, but then it continued, and it gave you the full move. And you see the ratio, 3.63 to 1. Or it's not to 1, it's just 3.63, which means 3.63 to 1. Right? 3.63 to 1. So that means this little red box can fit inside this green box 3.63 times. It's pretty much that. And you want to, whenever you take a play, you want to visually set where your stops are, like where your stops will be. Like, oh, I would stop here, and I'm aiming to achieve 3 times. 3 times should be the minimum. If it's not 3 times, like right here, risk reward for this play right here, I would probably set my stop at this green line. I would take my entry right at this this white candlestick, the top of this white candlestick, and I would set my high at this. That's like a 2.5 to 1. It obviously would have stopped me out immediately, but that's how I eyeball my plays. I always like to buy plays very close to support with a very high upside to give you that, if it's calls, to give you that 3 to 1, or very, very close to resistance with a very high downside, upside to the downside, right? Upside move to the downside, or upside gain with a downside move, right? Calls and puts. Play it close to support. That way you get a nice strong move to the upside. Every play that I put out always has at least a 2 to 1. At least 2 to 1. I always aim for 3 to 1 is like the best that you should look for. Tomorrow when I put out plays, I'll draw some of these on the chart so you can see what they look like. So it makes more sense to everybody. So what do I have next? Costco. Costco's at all-time high. Let's get a continuation. I mean, why not? Oh no, it's not all-time high. Sorry, it's annual high. Annual high. So why not get a continuation? We did have this multi-year wedge. Multi-year wedge that formed on Costco. Just wedging and coiling and getting tighter and tighter and tighter. A little bit of a rising wedge which broke down and then just continued. and then went to this resistance level, sold off a bunch, went sideways, and now it's back. Made a new high for the year. And so I want to see a continuation. I mean, 600 is right there, so let's just aim for that 600. Very, very strong. You know, look at this look at this past week's candlestick price action. Strong move here, pull back a little bit. Looks like it was getting some velocity to the downside and got a nice bounce. And all the volume was at the very end of the day. So as long as it stays above high of day, or if it comes back and retests it, then you know that's solid. It'll probably hit 600 at some point next week or next couple of weeks for Costco. Next one is Duolingo. Duolingo has not made it on our chart on our watch list in quite some time. Now, the reason why I like it is because, I mean, it just made an all-time high last week based off of, was that earnings? It looks like earnings, that all-time high. Let me just double check. Yeah, the high is 217. Yeah, so brand new all-time high. Go to daily earnings. I don't know. Yeah, I guess. I mean, I've seen them. They're making commercials too. When I see companies make commercials, I get very excited because I'm like, oh, you got money to spend? That means the shareholders are getting paid too. So I like to see a continuation. I don't think that the chains are very liquid, but I remember the last time I played Duolingo, that paid out pretty well. You had to hold it for a few days in order for it to make that upside move. So I'm just looking for maybe a little bit of a pullback. Let me zoom in on this candlestick. These candlesticks. Has this thing even been trading for a whole year yet? A little bit of a pullback. I want to see it hold this area of volume. Not there. I want to see it hold this area of volume where my green line is right there at around 190. So hold 200. Come back, hold 200, and then from there we can work our way back up to 215, 220, etc., etc. You know, even hold 200. Take your entry there for high of day. Right? I don't know why my thing is glued to that. Why is it glued? Just glued. It's just glued to that last candle. Anyway, Duolingo to the upside. Next one is Starbucks. Starbucks broke my downtrend. Rippy candlestick off of earnings. Continuation candle. Continuation candle. What is it? Whatever. Continuation candlestick. Strong move up. Little pullback. Continuation move. I want to see it break above the week's high. What the hell is going on with my chart? It's just glued onto that candlestick. I don't understand why. Yeah, I'll just do this. There. Bother me less. All right, so I want to see a break above Wednesday's high. The high of the week was 104.82, so 105, let's call it. Above 105, we got. Let's see if this is gonna bother me. Above 105, we got 107.15. Above that, we got this area at 109. So 109. Let's call it 109 for the week, potentially, right? If we get a strong move out of Starbucks. Starbucks. One thing about Starbucks, which I'm very bullish. I own them in multiple portfolios. Starbucks has, if you have a gift card or if you have the app and you have money loaded onto it, right? Because it makes your life easier to have money loaded onto it. Maybe you could, it's for budgeting purposes, whatever the case is. Starbucks has $2.3 billion in their app and in gift cards, chilling. No FDIC insurance, interest-free loan from the public. They can do that. They can do whatever they want with that. That's it. Starbucks is a bank without having bank regulations. I think that's just very strong of them. They want to build stores. They can do whatever they want with that money. Next one is Shop. I like strong bar 2 weeks ago. Inside resting bar, sitting at all-time, or not all-time high, but pre-annual high anchor VWAP. So yeah, it's just a key spot. You know, Shopify, if it can hold this level, this current level, hold this VWAP, it can try to break above that trend line there. Very simple, right? You know, break above this level here, Target this level here. I gotta restart my trading view. This thing is all I think I was staring at the charts for too long earlier. Right. I mean, some of these, 71.43. That's very, very long way away, I think. But the weekly chart, it's right there. Maybe 2 week move or something. If we get the conviction in Shopify, right? So that's Shopify. What else do I have? Do I have a lot left? Yeah, I have a handful left. Snow on a weekly. The reason why I like Snow is because it bounced off the support level here. Right, you see just a bunch of volume sitting back here, and then you got support, support here, support here, support here, support here, and sitting at that 100-day moving average. If we can get above that 100-day moving average, good consolidation, break above that 100-day moving average, and then we can come back and test this area here at 166.46. I think this is a mother bar here. This looks like it's an outside. I think we broke down here, but we broke down the low of this bar here on the 50-day, bounced and ripped back to the 100-day. So above that 100-day, very, very easily we can get to that 166.31. That's what I'm looking for. If we reject the 100-day, we work our way right back to that 50-day moving average. So nice risk reward, upside and downside. Uber. Is this all-time high for Uber? No, it's not. There's no way. Yeah, okay. Annual high for Uber. Nice cup and handle for Uber. Nice cup and handle. Inverse head and shoulder, all that. Bull flags, falling wedges, all that. But we broke out and made a new high for the year so far for Uber. Break above the week high. And I don't know. Somebody tell me what the reason why they're ripping like. Because I do not know. It's not Uber Eats. That's for sure. Or actually, it might be Uber. It might be. How is this lock? What is this lock? What is that? So that anyway, that's what we got. I'm looking for a nice upside continuation. Final targets into the future. I don't know if they'll come anytime soon, but they're there. This one has a decent risk reward to the downside because you can set your stop at 52.36 and play this candlestick down and then play it to the 50. Give you a nice risk reward to the downside. If you like it to the downside, is any of these long or short? I don't know where that tool went. I think I have to restart my trading. That's Uber. Visa weekly. As it gets more expensive to borrow money from the banks, people are going to borrow money from the credit companies, right? So as inflation goes up, people put more stuff on credit. Credit companies are living right now, right? Nice cup and handle. Visa always gives me like really just weird price action. But there's a 3-week chart. It's just so ugly, right? It's just so like up and down, up and down. But nice cup and handle potentially. Nice little retrace. Set on a 200-day moving average, and now bouncing off of it. Right, let's go back to the week. Bouncing off of it. Double bottom on it right now, real quick on the weekly. Inside bar. Is that right? Let's see. High 245.27 and high of whatever. I cannot. I don't know what the hell's going on. Let me see if I can figure it out quick. I don't know why everything is locked. I don't know. But it looks like, and somebody just drop it in the chat, if this week and last week's high are, it looks like we're still within last week's high and didn't break above last week's high. So if that's the case, then inside bar, strong hammer, inside bar, strong igniting bar, break above all previous resistance, through all the major moving averages, resting bar, potential continuation. I got 246.76 as a first target, 252.67 as a second target for Visa. Very simple. Zscaler. Kuwait, Middle East are boycotting Starbucks, McDonald's, some others over Gaza. They're all empty. Not much will impact the companies. Don't know how much that will impact. Yeah. Yeah. They might be impacted. They might be impacted. One thing I'll say about the market is that investors are greedy. So in terms of how their business might be impacted, it might be one thing. In terms of how the market perspective will be impacted, it might not. The market might not. You would think that that's how things are going to work out, but investors. One thing I know about investors is that investors are greedy. That's it, and take that however you want. Um, I think that this Zscaler uh, Zscaler is set up to. So Zscaler, Palo Alto, DDoG, they're all like in those tech services or secondary tech companies. They service tech companies and they service like CRM and what's the other one? All these companies that kind of are just like secondary service companies. Zscaler is one of those, and it seems like that whole industry is going pretty strong right now, especially with this. I feel like it's more aligned with what's going on with Gaza, and so companies are increasing their security, and by proxy of that, they need more services, and that becomes beneficial for Zscaler, for Datadog, for Palantir, et cetera, et cetera. So I like this to the upside. Strong move off the 50. Nice higher highs or higher lows, higher highs. Almost like a triple tap setting up around this area. But anyway, above that 177.69, we got 185. Above that 195. Zscaler, when it gets strong, it gets going. So I would just keep an eye on it if you like it. This is probably one of my favorite charts because it looks like a lot of those other charts did. For example, Netflix, Google. Who else? Was it Microsoft or Netflix, Google? Something else that we went over that had this inverse head and shoulders that formed. And the other charts that we were looking at, they were up here. They were up, way up here as a result of what was happening down here. So Zscaler might be at the very beginning of that move. So just keep an eye out on it. Zscaler. Next one, I don't think this is on my list. Yeah, that's it. Let's look at Tesla. Tesla. I'm not in love with Tesla this week. I'll be honest with you. Let me get rid of some of these. Before I get rid of it, you see that I had this kind of wedge forming here on the weekly. Let's go to it. You see how we had this wedge forming here? I'm not in love with Tesla right now. Price discovery occurring within this range, getting tighter and tighter. Price fell down. And right now, it looks like it's kind of forming an H, right? Let's go to the 2-day. It looks like it's forming, let's go to 3-day. It looks like it's forming an H right here, right? But what I saw with Tesla, the reason why I don't like Tesla, there's two reasons. Tesla looks very weak to me right now. The last time they reported negative earnings was back in 2021, and they did the same thing this time around, which caused this downside slide. 1 minute, 1 day, okay, right? They reported negative earnings, which causes downside slide. But then we also have like Cybertruck releasing, and then Elon just talked about how they're gonna sue people who sell their Cybertruck on the secondary market, which I don't think investors are gonna be in love with. So there's kind of a bunch of things going on with that I'm not really too sure how it's gonna go. And then not only that, but we are forming the H. We are forming kind of an H here. Right now, there's also a wedge, but then there's kind of also, I don't have a good read on it right now. Is the reason why I don't really love it. Right? I just don't have like a great read on it. I feel like with Tesla, you don't have to force it. You just have to let it come to you. Right? There's like a bunch. You see, there's a bunch going on right now. So I just don't want to force it. I don't think that Tesla is, and maybe I have a bias with all these drawings. Tesla showed a bunch of strength on Friday too, and it was like weird strength because it was like, are you weak or are you not weak? I don't get it. Like you're decoupled from tech, but then you're showing strength, but then you're not showing. I don't understand it right now. So that's why I don't love it. If you go to like a 2-day, yeah, I mean, like even still, like there's just like go up. Is it gonna what's it gonna do? I don't know. Maybe on like Thursday we'll have a better read of this, but right now I'm not in love with it. I'm not in love with it. I mean, it's like it's a higher high, but it's also a lower high, a higher low, but it's also a lower high. Like it's still kind of wedging. we're like kind of in no man's land right now, but then there's also like no man's land, but then like, it looks like we're in demand based on this move, but then there's a bunch of consolidation here. Like it's just in a weird spot for me. So I think in 2 days, or maybe even after tomorrow, we can have a better conversation about it. I would love it above the 200-day moving average, above this, even above like Thursday's high. That would be like a good spot to talk about Tesla, right? Because at that point, I can say, all right, cool. Thursday's high is your entry, 200 days your stop. That's your first target. That's your second target, right? Right now, I don't know. Maybe downside if you want to take, like, I just don't love it, right? But there's some levels. There's some levels. If you want to force it, there's some levels. I would wait for like a Wednesday or something, Thursday, for it to give you a better setup. But yeah, that's it, guys. I gotta go. I appreciate you guys for being on the call with me. Thank you for spending over an hour with me on this Sunday night. I hope that you guys got what you needed from this call. If there's anything you have any questions on, go ahead and feel free. I'm always available. I do not plan on taking any other trips for the rest of the year. So actually, I'm going to Vegas. That's a lie. I'm going to Vegas in a couple of weeks. But I should be available for those calls and for that time. So thank you, guys. I will talk to you tomorrow. Looking forward to this trading week. It's going to be fun. Take care, guys. Peace.